What is up, guys? It's currently 100 degrees in my room and I'm melting to show you guys and make this video for you guys. We're going to be talking about BK.TO. So if you're going to exit the video right now, check out BK.TO. But stick with me. So I was looking at Canadian banks to invest in. I was going through Royal Bank and TD and comparing them and seeing which one I should buy because I think they're undervalued. They have a nice dividend. They're very profitable and they are growing. We're going to get to that later in the video, but I found this blog post, whatever you want to call it. It talks about why invest in banks. So right here it says durable economic moats. They have a huge moat. If you scroll down here, the big six: Royal Bank of Canada, TD, Bank of Nova Scotia, collectively control about 95% of the sector's market share. So they have 95% of the clients in Canada. Everyone has a bank account. It's just crypto didn't take over yet. Everyone still goes with banks. They get mortgages over banks. They take loans over banks, high interest. We pay on transaction fees, blah, 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 blah. So their dominance gives them considerable influence over the economy, huge. They set interest rates. They have lending. They've had fees for everything. Blah 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 blah. Okay, let's get it to it. BK.TO. Why am I talking about this? It is pretty much an ETF that has holdings of the six big banks. So they hold Royal Bank, TD, National Bank, Bank of Montreal, which all pay dividends. So you might be asking, why does this stock pay 15% dividends? It's a good question because they own all the stocks and they get leverage, collateral to their shares to buy more shares in a way. Now, is this safe? Is this sustainable? Yes, it is. They're not the only one that are doing this. If you want to watch videos and understand it more, it's called Split Corp, Split Shares. Check it out and do your own due diligence. There is a way to check how safe it is, and we can do that right now. Actually, 15% dividend. It is pretty stable over the last 5 years. Besides the drop in 2020, which everything dropped in 2020, it didn't go up or down too much, and you get to collect the 15% dividend. It does the shares in their portfolio, if they go up, if they go down, this ETF will match it. And why buy one bank like TD, which gives a 4% dividend, when you can diversify holding six banks and get a 15% dividend? So NAV, we're going to be talking a lot about that. It's net asset value. So the net asset value is $19. $19. And why does this matter? Because as long as the NAV is above $5 for BK.TO, they will continue to pay their dividends. The last time they missed their dividend is in March of 2020, and that is the only time they really missed a dividend. Since then, they have been paying monthly dividends, which is an awesome income to have. Can't ignore it. So, what do we want to talk about? Why buy banks? We kind of went over it a little bit. You can go and check out all the individual stocks. There's other split ETFs, whatever you want to call it, that do the same thing. For example, DFN, which pays an insane 25% dividend yield. Why do I not invest that rather than BK? They own more stocks, but the stocks like Manulife Financial Corp, Thomson, and some of the other stocks I went through that they hold are doing poorly. The revenue is going down. Their share prices are way overvalued, and it's something I don't feel safe holding. As you can see here, the DFN has a 25% dividend yield. It went all the way up to 30%, 33%. Huge income, but if you look at the share price, they are way more volatile as well, and I just don't feel as safe holding them. But you can check this out as well, and if you do your homework and think they're gonna stay in the share price or go up, this could be a great buy as well. Their NAV is 14, and it can be a little hard to find because as long as the NAV is above a certain price or below a certain price, they will continue to pay dividends. Also, another risk with these split ETFs is they have termination dates. So for BK.TO, the one I'm interested in, is their termination date is in December 1st of 2028. So why doesn't this scare me much is because they are subject to a 5-year extensions. And that's what usually happens with these types of ETFs. They just extend and extend and extend. They have been around for a while. This one has been around since 2006, and they have had multiple termination dates, and they're still around. So they will most likely extend it as well. So what? Oh, other one. I found another exact same thing. Split ETF, Brompton funds, which hold the same thing. 6 banks. They have a pretty safe NAV. They will continue paying NAV as long as it's 15 or under, I believe. Let's find out. We can find this out really quickly. Maybe we can. We'll add it or something. We'll see. But they pay a 13%, 14% dividend, which is a little bit smaller. And I just did more research on BK, and I feel way more comfortable holding that. So if you guys are looking to invest in banks and want to diversify your portfolios with some great dividends, monthly dividends, I think this is a great place to start, and I think you should really check out. And yeah, I'm gonna go take a cold shower, guys. And the NAV average is usually 15, but they said their own things. Thanks for watching, guys. And yeah, if you look through conversation stuff, people are pretty bullish on it. And if you take a look at some of the companies they hold, like I was saying, I was going through TD, Royal Bank, RY. I'm pretty bullish on them, and as long as the stocks they hold are good and I feel safe holding them, I feel safe holding this ETF as well. So as always, do your own research. Try and use Stock Unlock. Daniel Pronk's platform. If you don't know him, go check him out. So if you look at this, the revenues are growing nicely. They're insanely profitable. Look at that, 50 billion in revenue and 10 billion in earnings. These guys are going to continue to pay their dividends. They're going to continue to grow. And if you look at their share price, it is the same as it was in 2019. And they have grown a lot since 2019. And if you look at these guys pay a 5% dividend. Their financials are pretty strong. Their financials are very similar to, what's it called, to Royal Bank and the other banks. Pretty healthy balance sheets. Look at RY. Also, another thing I like to look at when I'm looking at stocks is insider buying and selling. Stock Unlock makes it easy to find. As you can see, there have been recent buyings in June by many people. A little bit of selling from the CEO. We don't like to see that. But yeah, it only sold $1 million compared to the share count. It doesn't make a big difference. Obviously, institutions hold most of the stocks. And that's all I wanted to say. Thanks for watching, guys.